I found the word you used, disrupting, right? Disrupting. I found it interesting. Um, Pardon me to say, I don't think there's a lot of disruption to be done. I think there's building to be done,
Yeah.
right? I think we can talk about disruption in places that has systems that actually work. Um, we are trying to leapfrog,
Yeah.
right? Leapfrog to actually build systems that work. If you try to find your way around cities like Cote d'Ivoire, Abidjan, or Lagos, you would realize that there's no disruption to be done. It's
Yeah.
building,
Yeah. It's
right? Because it's a mess. You're leaving one place and you don't know when you're going to get to your destination. You have no clue,
yeah.
or maybe you have like a 1 hour, give or take. It's not good enough, right? It's not good enough for a country who wants to grow their GDP. And so I feel like a lot of the mobility companies are basically creating from scratch.
Welcome to the Mobility Innovators Podcast.
Hello, everyone. Welcome to another episode of Mobility Innovator Podcast. I'm your host, Jaspal Singh. Mobility Innovator Podcast invite key innovator and investor in the transportation and logistics sector to share their experience and their forecast for the future. In this episode, we'll be discussing the role of venture capital to support innovation in Africa, and also how Africa is emerging as a next innovation hub. Our today's guest is an amazing emerging market seed stage investor who is the managing partner at Oui Capital, a Pan-Africa early-stage venture capital firm. Before launching Oui Capital, he started his career in commercial banking with Nigeria Guaranty Trust Bank, later working as a TI consultant at Forrester, a global market research firm advising some of the biggest technology companies. He also worked at Silicon Valley Bank's early-stage practice, supporting early-stage startups across the East Coast of the US. In 2019, he launched his first fund, Oui Capital, with $5 million. And in August 2022, he did the first close of his second fund of $30 million. The fund is making investment in logistics, mobility, fintech, e-commerce, healthcare, and enterprise software sector. I'm so happy to welcome Olu Oyinsan, managing partner at Oui Capital. Now it's time to listen and learn. Hello, Olu. Thank you so much for joining us on the show. I'm really looking forward to our conversation today.
Same here, Jasper. Very interesting thesis, very interesting theme for the podcast. Yes, I'm excited.
Great. So today I'll be spending time getting to know more about you, about Oui Capital, which is your venture fund, and also the startup ecosystem in Africa.
Mhm.
To begin with, I would like to ask you if you can share some fun fact about yourself with our listener. And I saw your LinkedIn profile is quite detailed, but is there any fact which you are still hiding from the world?
um, Fun facts, fun facts, fun facts, fun facts. Okay, two things. I previously wanted to be a professional footballer, soccer player,
Okay.
right? As you know, every dad from an emerging market or a country that's poor knows that that's a no-no. You're either a doctor, lawyer, in finance,
Engineer.
engineer, or a disgrace to the family, right?
Yeah.
So they didn't want me to be a disgrace to the family. So I wasn't led to do that, but I was pretty good at it. The second thing is I've been fired before.
Mm. Oh.
Right? I think that's that I don't think that's one I share very often. I think I'm probably keeping it for some very interesting times. Maybe I'll sell rights on a book for it.
Okay. Okay. But that's interesting. That's interesting. But it's always, I always tell people, to grow in life, you need to take a step back. So probably that was the moment where it give you a rocket push and propel you in a career.
Correct.
And immigrant parents, it's the same story. Now I'm a parent and I'm an immigrant.
Mm.
So if my kid come to me and say I want to be a footballer, probably I'll also follow my dad's footsteps. But I'll tell them, okay, be a footballer, but be a doctor as well.
which is impossible. So
Which is
you just
impossible,
trick
I
them.
know.
Exactly.
But I think there are more sense now. But I think it's a journey our parents went through, and they want best for us. So now, something interesting on your LinkedIn profile, and you mention on your LinkedIn profile that you want to democratize opportunity through venture capital, which is a kind of a headline for your LinkedIn, but I think it's also your personal mission. So I'm curious to know the story behind this mission, why you felt that way, and also I saw you have a successful career as a banker. So what inspired you to take this path and set up the We Capital?
So there are a bunch of different things. First of all, I think looking back right now, or just looking at my career from outside, it might look normal, but I would say for where I am today and what I'm doing, I'm probably pretty disadvantaged, right? Getting into here, or underprivileged,
Yeah.
right? My privilege and my opportunities growing up don't add up to what I do today, or my career trajectory, where it's gotten to or where it's going, right? It doesn't add up. And I think what makes it even what makes it even crazier is it doesn't look like it,
Mm.
right? Um, but so my life has been a roller coaster of positive outcomes,
Yeah.
right? Almost every time there could be a positive or a negative outcome, almost every time,
Yeah.
right?
Yeah.
It usually comes out as a positive outcome, especially in life-changing moments. And it lends itself to understanding what opportunity and outcomes can be for people's lives, right? And what a better way of expressing opportunity and outcomes than entrepreneurship,
Yeah.
right? Um, and so entrepreneurship is that place where it kind of takes you out of the grid, and you can be whoever you want to be
Yeah.
without the constraints of status quo and all those kind of things, right? It's
Yeah.
wild west, where there's a lot more, basically just earning what you put in, right? As an entrepreneur, no one asks you for your degree. No one asks you how well did you do. No one asks you for your work experience when they're buying a product that they love.
Yeah.
Right? You've come out here, you've created a product, they love it. They don't care, right? And so nothing brings democratization like entrepreneurship, right? But a lot of times, what entrepreneurship has become in the world today is that entrepreneurship usually needs to be funded.
Mm.
Personal experience, Francesco and I had started a company in 2016 called Wi-Fi Monkey
Okay.
that we were unable to raise money for. I, a Nigerian immigrant, he is Swiss immigrant, even though those are classes of immigrants, but still, it was very difficult. And so what we really experienced at the time was that we're sitting on a great idea, big market, but we were just unable to, get the kind of funding that other people would have had access to. And so this, coupled with my just background and interactions with opportunity across my life, we said, why don't we find a way where everyone who has the potential to be great can be great with our help,
Mm.
right? We've now been blessed with a little more validation in our careers, a better network, not forgetting where we're coming from. We said we can change the story for the next hundreds or thousands of entrepreneurs coming behind us who don't fit the regular mold of a man who'd, trash the first startup and raise
Yeah.
350 million the next year or two, right? We don't have that opportunity. And so let's at least give one opportunity to people who are like us. And that's where we really came at it from, right? And you know what they say, that talent is evenly distributed, but opportunity is not. And so what we actually set out to do was to try to balance that scale a little more. We still have a long way to go, but I think we've started in the right direction.
Yeah. Oh, that's superb. I really love your point that how entrepreneurship can be a big leveler in the society. So as an
Right.
entrepreneur, nobody asks which college you come from, which educational background you have, what kind of experience you have. If people like your product, so they don't care about those kind of a thing. And that's what we see. A lot of this successful entrepreneurship story is people are school dropout or college dropout. You will never see them succeed in a professional career, but they can do that. And I think it's the best way to bring equality in the society, giving opportunity to people who has potential. So
Right.
so great to hear that. Now your fund is focused on Africa, and I think
Now,
Africa,
for
yeah,
now,
for now. Okay, so you are planning to expand to other geography in future?
I think that's the topic for another day, right? But as I've said again, opportunity, talent is evenly distributed, right?
Yeah.
We have investors in Africa who are just as good as any other global investors, right? And so there's a lot of unique insights that we have that we share with the world.
Mm.
I think maybe when a lot of African investors get mainstream,
Yeah.
some of the problems we have in venture capital today will be solved. But again, as they say, charity begins at home. We're going to use Africa's prosperity as a case study so that
Okay.
the rest of the world can learn from us.
Oh, that's great. No, I think that's a good point. Always start from your home and then take it to the world. Now, for Africa, you are doing some amazing work, and the reason for that is it's a big market, and right now it has a big population, around 1.4 billion
Correct.
population in the continent, and it will be one of the continent which will keep growing in terms of a population.
Mhm.
But I think the challenge for big population cannot be solved by the traditional way. You have to involve tech and technology. So we will see a
Right,
lot of tech startup
right.
in Africa. But the reason is always neglected or ignored by the venture capital firm. In fact, it attracted only 1% of global venture funding in Africa, which is pathetic because it should get more. So I
It's
would
going to
love to
go
know.
to about it's going to go to about 2% this year.
Oh, that's great. So at least it's 100% growth, but it's still small. It's still
Yeah.
small. I feel when you have a 16% population of the world, so 2% venture capital funding is not enough. But I think the what you are doing, it will change. But I would love to know your experience because you are working in the continent, and like you said, you have your roots in Nigeria. How
Mhm.
this startup ecosystem is evolving in Africa, and like you said, it this year it will go to 2%. What is your prediction for 10 year, like in 2030, what share we can see from the startup coming from Africa?
So I'll start with your first question on just what I see as the ecosystem today. Clearly, the funding numbers say something, right? 2 years ago, we were 1.3 billion um, as a continent.
Yeah.
This year, we're going to cross 5 billion, right? So clearly, we're doing more than 100% growth year on year.
Yeah.
And that 5 billion is symbolic this year, just given how much the rest of the world has shrunk,
Yeah.
right? And this is the reason why when you just oppose it, the growth actually tells a story, a very tiny story, but a profound one that um, investors are getting more bullish,
Mm.
right, about Africa. So that's the first thing. The other thing you would see is just that apart from the share growth, there's development, right? Um, the the ecosystem is getting a lot more sophisticated, right? You see global accelerators now. There's now Techstars in Lagos,
Yeah.
really setting up the kind of things that you see where resources start to gather around opportunity, right? And just the knowledge about how to build a company is getting more common on the streets of Lagos, right? It's less of a unique career to say I'm a
Yeah.
startup founder. right? Um, they know it's come of age, and this is how you know that a country or people have started to deploy their resources, either it's time, either it's recognition or money, just
Yeah.
around entrepreneurship of what it is as new age opportunity. So that's the first thing. The second thing is really what you think it's going to be in the next few years,
Mm,
right? Um, as someone who, again, is a proponent of democratization, my answer is it depends.
mm,
It depends on what we do with what we've got right now, right? And this is why I think at We Capital we have a we have a very unique approach
mm.
to how we look at being a VC investor. And I tell my team this all the time, like, yeah, it's great to be in TechCrunch, it's great to be doing all those things. But eventually you're a money manager, right? And the one single thing that underscores the performance of the money manager is not how much publicity you've been able to bring to the asset class. It's not how many times you appeared on CNN. It's not how many times you appeared on TechCrunch.
Yeah.
It's not how cool it made you look. Is how much of that money did you return to the provider of capital,
Yeah.
right?
That's
And
true.
I think as VCs, especially in tech, we have to keep our eyes on the ball, right? And this is why I said what that number is going to be in a few years depends on us, depends on what we do, depends on funds like We Capital, right?
Interesting.
Are we going to go back and return 5, 6, 7x cash on cash to our investors, right? If we do that, it's not going to be a question. If we don't do that, then it becomes a question, right? Of what's going to happen.
Mm,
And so that's why I really say just, and this is not out of a place of pessimism, it's out of a place of just knowing how capital works,
yeah.
to say what direction is going to go is going to depend on how we've treated the capital that's coming in, right? I think just the early signs are really good. Our fund is doing pretty well, especially the first fund, and I know many other funds across the continent are doing pretty well, right? Liquidity is becoming an easier topic to address,
Yeah.
right? And so I think just going the way we're going, we're probably going to maybe get to 5%
Mm,
of what the global is. It will be short of the 16% of the population,
yeah.
but it's a start. It's a good start.
Yeah, no, I think 5% is also a good number. And I love your answer. Actually, it's like taking that responsibility, not saying that others are not doing it, but taking the responsibility, saying as a VC fund, you need to bring return. And if you bring return, the investor will come and ready to put the money, more money in. I mean, your
Sure.
next fund can be $100 million and another one can be $500 million, but the condition is have you returned 3 or 4 times of your previous fund. So if you can do
Correct.
that, the size can keep going. That's
Correct.
great. Thanks for sharing that perspective. I really loved, Olu. Now, about your fund, I'm curious to know what is your thesis, what are the sector you're investing, and why you pick those sector.
So I'll tell you. First of all, and I'll give you my career background. I started my career in banking, funding
Mm,
small businesses, right, in Nigeria, and it's usually not it's usually not the it's not the background of most people in venture capital today,
yeah.
right? People with my kind of background back in the day, they used to call them recovering bankers,
Oh.
right? Basically, people who didn't just see tech as this huge um, growth rocket that it was, right? Um, it's different for me because I had worked in technology consulting after that. And I think it gave me a very rounded opinion of what tech and growth in tech should look like, and the
Mm,
kind of results that you want to be seeing, the kind of impact that this company should be having on the communities they serve. That being said, I personally think that we need to go through a very result-centric approach,
Mm.
right?
Yeah.
Result-centric approach. And so I came from a very traditional background, right? I came from a very traditional background, which is in credit risk, where you deal
Mm.
with a lot of numbers, right? Figuring that out, and then um, coming into tech. So it's for me personally, I think the approach we need to be taking is basically a results oriented approach. Is there
And
something in specific you would like to know?
yeah, I mean, I would love to know which are your sector you're investing, and why did you pick? Like, I read on your profile that you're investing in healthcare, fintech, e-commerce, mobility, and logistic.
Yeah.
Why did you pick
So,
those sector?
so just piggybacking on what I said as a result oriented approach, right? Um, the way Africa is set up today, it's again, it's I call it VC 1.0,
Yeah.
right? And VC 1.0 is basically that result oriented level where
Mm.
it's venture hits directly to the lifestyle and the living conditions of the people, because
Mm.
our needs are different. We're still lower on the pyramid of the hierarchy of need,
Yeah.
right? And so when we were starting We Capital, we decided to take a result oriented approach.
Yeah.
Like, what are the most basic needs of the people in the communities we serve, right? And what's the easiest way to really attack, uh, for need of a better word, poverty,
Yeah.
right? Still make decent returns to your investors. And so we went for the BC 1.0 sectors. We said if we can enable people to do better business, right, create opportunities for themselves,
Yeah.
and stay in best shape. So I'll call it a human-centric approach.
Mm.
So that's why you see us doing a lot of investments in financial technology,
Yeah.
right? Digital commerce, mobility and logistics,
Mm.
and in software. These are the places that really attack developmental poverty from the
Yeah.
roots, right? And as I call it again, it's VC 1.0. And this is what's responsible for how we've picked sectors we invest in. We want to make real impact now.
Interesting. Interesting. No, I never thought from that perspective, but I think what you mentioned make quite a lot of sense. Is these are the sector which has a direct impact on people's life, and any startup which will be doing something, whether it's a fintech helping a cashless society, or healthcare, or e-commerce providing opportunity to seller to reach out to a bigger market, and mobility and logistic, which I always feel is a key for any developed city or developing city to
No,
grow.
absolutely. And they run on each other, right?
Yeah.
So if there's no logistics, you can't do commerce,
Yeah.
right? Unless all you want to ship is software product, right?
Yeah.
So that's why they work hand in hand. And we kind of cross-pollinate ideas and learnings across these sectors as we invest.
Well, I love your point about human-centric investment. A lot of people say human-centric customer approach and all, but never heard about this term of using human-centric investment approach. Now, the sector we talk about, mobility and logistic, which is close to my heart too, because
Right.
I feel that's a key differentiator between a developing and developed market. Getting access for goods and people. If people have access to goods, and people can have access to job, it's altogether a different story. And
Correct.
mobility is one of the area which is growing in Africa. I mean, I have seen a lot of mobility startup coming up in last 2-3 years. In fact,
Correct.
some of them are going global. How do you see that the startup in the mobility and logistics sector are actually disrupting the market at the grassroots level, because you're working very closely with them? And also would be interested to know a little bit about some startup in your portfolio, like which are your favorite. It's difficult to point out, pick one or two, but at the same time,
I like the fact that you know that.
I asked this question to investor, like, which is your favorite? And they say, like, how can I pick my one kid over others? So all of them are my
Exactly.
favorite. But I want to understand which one you feel is like really making huge impact in people's life.
Okay, so to start, I found the word you used, disrupting, right? Disrupting. I found it interesting. Um, Pardon me to say, I don't think there's a lot of disruption to be done. I think there's building to be done,
Yeah.
right? I think we can talk about disruption in places that has systems that actually work. Um, we are trying to leapfrog,
Yeah.
right? Leapfrog to actually build systems that work. If you try to find your way around cities like Cote d'Ivoire, Abidjan, or Lagos, you would realize that there's no disruption to be done. It's
Yeah.
building,
Yeah. It's a
right? Because it's a mess. You're leaving one place and you don't know when you're going to get to your destination. You have no clue,
yeah.
or maybe you have like a 1 hour, give or take. It's not good enough, right? It's not good enough for a country who wants to grow their GDP. And so I feel like a lot of the mobility companies are basically creating from scratch, right? Some leveraging on some things that are already existing, but it's not a lot, right? So we've invested across countries and across companies doing mobility, either by physical assets or by software.
mm,
Um, Sometimes the same products that carry people also carry the same products that, or the same solutions that
vehicle.
carry people also carry products. So mobility and logistics at some point mix, right? Um, but you need mobility to do logistics,
Oh yeah.
right? And vice versa. So they're pretty intertwined. So we've invested all around from companies who are doing last mile, right? Some who are doing green mobility, some who are doing basically software for logistics and mobility.
Yeah.
Some interesting companies in our portfolio are Our Bike, who are basically doing their they're like they do bicycle mobility in
Mm-hmm.
universities across Nigeria.
Okay.
Currently, they do maybe about 4,000 rides every day in about 13 campuses across that. It's really hard work,
Yeah.
right? Plagued with all these problems, including government strikes in universities. And this is why I say there's nothing to disrupt.
Yeah. It's to build. No, I love your point.
Right.
I love your point there.
Um, so that's that. We have an investment in a company called Twin Day Mobility,
Mm-hmm.
whose product is called Twift in Kenya,
Yeah.
basically providing SaaS product for third-party logistics operators, right? So basically, it's like your Ride OS out of the box if you
Okay.
run that kind of business, right? So infrastructure level, we have an investment in a company like OK High. They're basically this time um, creates like KYC and location products for both mobility, logistics, and in fintech, right? So basically locates the person you're going to either deliver a package to, or the bank wants to know where they be, right?
Mm.
Very accurate. It was built by a team whose founder was an ex-Google Maps engineer. And so we
Interesting.
have companies like that. And we also have MDX out of Nigeria, which is more logistics. And MDX is very unique and special in the direction of their product targeting. It's actually helping people who would not have been able to sell to maybe somebody in India, or someone in Mexico before, right? You have a product, you sell cotton, you sell cocoa, you sell shea butter,
Yeah.
and now, right, Jaspal, who's based in Mumbai, actually wants your product. So on MDX, Jaspal can buy from you, and they'll take care of everything end to end, right? Logistics from your door to Jaspal's door in the other country. And not only does it do mobility, it does help trade.
Yeah.
Now you're actually expanding the opportunity for a business owner somewhere in the world, going back to our original mission, right, of putting this fund together. And so those are some of the companies in our portfolio. We've looked at many, many, many other great companies that we couldn't back, right? Of course, you can't back every company, but there are a lot of great companies doing things out there. So that's a lot about our portfolio. What was the second thing you wanted to know?
Yeah. So basically about like why you feel that this mobility is important in Africa, but you already answered about like it's a building. And I love your answer because, and thanks for correcting me. You rightly mentioned it's not the disruption, it's actually the building. Because there's a lot
sorry,
of
I have a lot of
no.
hot. I'm an angry VC.
No, but I love to be get corrected. And in fact, that's one of the thing I want to check with you and understand and pick your brain. Like you said, the Africa want to leapfrog now. You don't want to take the traditional path, and
we
and
need
take,
to. You don't have a choice.
You don't have a
We're
choice.
having more babies quicker than we can cater for them. So we need to. It's an urgent matter.
And one of the area you need to leapfrog is the electric vehicle space, because the world is moving toward electric vehicle. Till now, the motorization rate is very low in Africa, but it will grow. People will get more money. People will become richer. So you need mobility. You will buy vehicles. You need electric buses and the trains and all. Now,
I like how you've made that. I like how you've made that assumption.
No,
that every country needs to move towards electric.
I didn't make an assumption, but why I feel that is happening is one, Africa has a lot of solar, which can be harnessed, which a lot of people miss. Secondly, I think Africa cannot do the same mistake what other country did with the fossil fuel because the pollution level. That's why I want to check with you. What do you think about this whole electric vehicle phenomena going on around the world?
So yeah, this is I feel like this is half an engineering conversation as it is a political conversation.
Yeah.
Right. And that's why the moment I heard, oh yeah, and Africa needs to move towards electric, that's the reason why I probably interjected and said, and this is not really this is not an expression of my opinion. This is more just having a very rounded discussion, right? I don't think there's one single way to skin a cat, right? And again, a lot of countries, as you said, have made this mistake.
Yeah.
They're better off for today, and they're in a position where now they can switch, right? Because now they're disrupting what they already have, what they built with fossil fuels, right? We don't have anything. And the question is, should we leapfrog? That's the first question.
Yeah.
Right? Should we leapfrog, or we should go through the developmental phases every country went through? Right? Should we be looking for our own net zero? Most of these countries have contributed mostly, right, to the carbon footprint we have today.
Oh yeah.
Right? And so what does net zero look like? Is it net zero for the world, right? Do you contribute most of this, develop your own infrastructure, and then turn around and say, oh no, everyone now let's go clean, right?
That's what's happening. That's what's happening. That's what's happening right now, you know, like everybody's pushing.
Or do you let us develop at our own pace and then go clean too? And everyone owes responsibility for their net zero. I guess that's a question to be answered, right? And also, there are things around competitive advantage, right? Some countries, right, are rich in lithium. Some countries aren't.
Yeah.
Going electric is going to make some countries poorer. It's going to make some countries richer. And as I said, this is getting into it's a public policy conversation as much as it is a venture capital investing conversation. And so I definitely believe we need smarter, cheaper, and less harmful ways to move people around, right? But also we need to move people around.
Yeah,
It's the first.
I agree.
And goods around, right? That one is existential. And so I think each government has to really figure out what's the best situation for them and their people, right? And then we will layer on top the topics of sustainability as it works for each person. But I do agree with you that EVs have actually created a lot of disruption, right? Is it cheaper? The jury's still out.
Yeah.
Is it more sustainable in the long term with all the lithium in the batteries? The jury's still out, right? But I don't think we should, as a world, I don't think we should stop at EVs and say we found it. Maybe we can go to water. Who knows?
Oh yeah.
Right?
Yeah.
But I as I said again, that if you're a country that is rich in lithium and poor in petroleum, I think you probably want to be figuring out how you use your own homegrown resources best. It's really going to accelerate development and just prosperity for the country, right? And I also think every country should move at their own pace.
Yeah.
Right.
No, I agree. I agree. I mean, these are important points. And one point I feel what you mentioned is critical, is that at the end, people need to move. The goods need to move around. So you cannot stop those development and saying
it's just like the excuse I make for America, right? And so I'm both American and Nigerian, and so it's a very tricky place to sit, right?
Very true.
But you know, you go to Europe or you go to Africa and they say, you know, the food you guys eat in America is trash, right? The food, this makes people fat, makes people die. I agree, right? But I even notice each time I'm going fundraising in America, right? I gain a few pounds and I'm eating the same amount of food, right? What else is going bad with my body? I don't even know.
Yeah, that's it.
But I said, what it is that America has two problems, right? One is to make sure people are healthy from the food they eat. The second one, which is existential, is to make sure people don't even die of hunger.
Yeah.
So you need to solve the first one. And they had to make a call.
Yeah.
And said, you know, let's lower your life expectancy by like 5 years, but let's keep you alive.
Yeah.
Let's make sure you don't die today.
Because of hunger.
Yes, all this food is out there. Less people are dying of hunger. What's going to happen at 60, 70? How much is your healthcare bill going to be? I don't know, right? So that's the same thing with the conversation. We need to move people around first and goods around first. It's existential, right? How to best do it sustainably is the next phase that we are going to attack.
Yeah. I mean, it's a process, and I mean, some way you can leapfrog, but at the same time, I mean, to be honest, I'm seeing a lot of traction on EV front in Africa, but like you said, it's not equal. It's not like all country can do it, because some country have resources, lithiums or mines, which can be used for battery production, but other countries, they don't. So it will create another kind of inequality in the society. Now, I love your candid answer. I mean, I really appreciate, because a lot of time people hide their open opinion, you know, and we should have our own opinion. In fact, when Elon Musk tweeted recently and he said we should increase the oil production, he's selling EV, but at the same time he said for current time we have to increase the oil production. So he basically said you can't just stop living, you can't stop the oil production because you said we going in EV, but that will take time. So in the same way, like you mentioned, it's good to go for EV, but you need to live today. So let's live today and then plan for the future.
Right.
Great. Thanks for sharing, Olu. And now I want to touch base a little bit about your investment side, because you are the, kind of a upcoming fund manager. I would say you launched your debut fund of $5 million with Francesco in 2019.
Mhm.
I wouldn't say the raising first fund is easy because it's difficult, but
It's hell.
it hell. But I feel, raising the second fund is even more difficult. I don't know if you agree with me or not, because you still want to show some traction,
Mhm,
want to some result,
mhm,
and you managed to do your first close of second fund, which is
mhm.
great because now you're raising a $30 million fund.
Correct.
Uh, it's a big achievement, I would say, for a new
Thank
fund
you.
manager to go for a second fund. So I would love to know your journey from zero to fund one, and from fund one to fund two, and what are the key lesson you learned on this journey, which you
Yeah.
would like to share with other fund manager or other investors.
Yeah, first of all, I'm reserving the details for my book. But I'll give you the abridged version. Um, like any entrepreneur who tries to get a business off the ground, right? Um, being a first time emerging manager and then investing in emerging countries,
Yeah.
it's pretty tough, right? It's double layer of adversity.
Mm,
But it makes you strong, right?
mm,
It makes you well prepared for the world. So I would say our first fund, I want you to compare it to the angel round of
mm.
a tech founder,
Okay.
right? What's the angel round? Usually, sometimes you have a product, the product has no real traction. Um, the product, you're not even sure it can work.
Yeah.
If some people are buying, we don't know if those people are buying sustainably. We don't know if they're going to come back,
Yeah.
right? We don't know what the future holds. So a lot of the times, people are betting on two things: what they see as the macro,
Yeah.
which is a proxy for opportunity,
Yeah.
and what they see as your personality,
Mm,
as the fund manager or the founder, right? Which is a proxy for if that opportunity will come to fruition.
mm.
Because you can see a fund manager pursuing a great market, but they're just not the right person to deliver.
To do it.
And then you see some great people, right, who are pursuing a market that you think doesn't have any new growth,
Mm,
right? And so usually angel rounds are a mesh of those two. Same thing for first time fund managers, right? And so at that time, what you need to convince people of is first, there's an opportunity here.
yeah.
You know what it is going around in 2018, 2019, selling Africa.
I can imagine
You need a lot
that.
of luck, right? Um, selling Africa as anything more than a philanthropic project at the
Yeah.
time. And also um, selling yourself as the man to deliver this promise when you're not coming off a 10-year or 15-year career in Goldman Sachs or leaving Sequoia to go start your own fund.
Yeah.
You're literally starting democratized again as a founder, right? And so basically, it's entrepreneurship. There are two types of fund managers, right? The ones who get the blessing of the fund they were at before, they reach first close the moment they decide they want to leave. They say, okay, your first fund is 10 million, here is 5, go look for the remaining 5. Or
Yeah.
this one is 20 million, here is 15, or here is 7, right? Or those who have spoken and gotten to first close before they even leave their job.
Mm,
Call a few LPs, well, this is what we're trying to do. They're like, okay, we're in 5 million here. And then there's the guy who decides to become an investor in other companies and has nothing,
yeah.
right? The background isn't that stellar. Um, the continent you decided to invest in isn't that stellar. There are like 2 exits, right? And it's just hard. So what it is really is that you need to figure out a way to sell those two things for your first fund,
Yeah, that's a great
right?
point.
Sell those two things and go to the kind of people who would have backed your startup at angel round,
Hmm.
right? Those are the people you need to take money from to create the traction that you need to raise your real institutional fund, which is
Yeah.
probably going to be your second fund. And you need to work as hard as possible to give an investor no excuse to pass on your fund
Hmm.
the next time around, right? And this is why I always say it depends on your performance
Hmm.
to figure out what the next phase is going to be.
Yeah.
And so we really went out there. I tapped into most of my network, former employers, friends and family, people who I knew while I was trying to build a company that we couldn't raise for.
Hmm.
Actually, one of our investor LPs in this fund is someone we were trying to raise money for Wi-Fi Monkey 7 years
Okay.
ago, right? He was the managing director at Textiles Boston at the time. And now, shout out to Semyon Ducat. Now he runs um, one of the basically best funds for immigrants in the US.
Okay.
He had moved on from Techstars and now runs One Way Ventures, right? Which basically, connecting 6 years later, and it's like, what are you up to now? And I'm like, I run a fund that invests in Africa. It's like, okay, I know you, right? Yeah, I know you, and you've come a long way. So here's a check,
Ah,
right? And so those are the kind of networks you need to tap into for
yeah.
your first fund. And when you manage to get that capital together, again, I see a discourse. I think you have to start small, especially if you're not privileged. You have to start small and show what you can do with the little you've been given, and then you grow from there, right? I think one of the downfalls of emerging fund managers is that we set a target based on societal expectations,
Yeah.
both for fund size and for the kind of things you should be doing, and then you never end up even doing it,
Yeah. True.
right? So just like entrepreneurship, you have to start small and keep iterating. It's a repeatable process. Keep doing it, and then you grow from there. So that was really it. We raised what we could. We thought we could possibly raise. We didn't even close at 5. We closed at 4.1. Basically, we didn't get to our target,
Hmm.
right? But it was enough to show what we could do.
Yeah.
And then pandemic hit, and the question was, should we be raising for 4 years, or should we take the money we have and go show that we're the best at doing this? And we picked the latter, and that was really good for us. We found some amazing companies um, who have done really well and validated us as people who know how to pick the best companies on the continent, as well as support them to success. And that's the reason why the first close of our first fund was more than 3 times our first fund,
Yeah.
right?
Yeah.
And this is how growth happens, right? But I think one of the major reasons is because investors who backed us the first time were happy with what they've seen, and investors who didn't back us the first time wish they did, right? And so I think this is how you grow it. It's a result-driven business, and you have to keep your eyes on the ball.
Yeah. No, these all are, I mean, amazing point. One, what I can sense from your conversation is that you always need to build relationship over the period of time. So even the VCs or investor who didn't invest in you, but you need to keep in touch, keep them close to you, because you never know how they will come back.
Yeah, absolutely. And and again, that's what I tell for a lot of first-time fund managers now, right? Is that it's never a yes or a no.
Yeah.
It's either a yes now
Or
or
later.
no now, right? It all depends on what you do,
Hmm.
right? And this is why some funds open and close within 3 months or 6 months,
Oh yeah.
because the investors who are coming into that fund have probably been investing in that fund in that fund manager for the last 20 years, right? And these are relationships that were built 20 years ago.
Hmm.
So It's a snowball effect.
Oh yeah.
Right? You keep building this network. You keep building this community of people who know and trust your work as a fund, and it becomes easier and easier. But it's hard if you're not a privileged geography or person type. But is it possible? Yes, it is. And you have to roll with the punches. But when life gives you lemons, you have to make lemonade with it. And that's what we try to do instead of sit down and complain about how the cards we've been dealt are not the same with someone who was born in the Bay Area, right? You can still make a difference. And I think it's really about how far you've come, not where you started from.
Oh yeah. Yeah, it's always important to try and keep trying. There is no way you can give up. And I mean, one thing I want to check with you is like, what is more difficult, raising fund as an investor or raising fund as a founder?
Oh, no question about that. You know the answer.
I know the answer, but I thought
Yeah,
to
I
check
think
with
it's
you.
10x. 10x is the right amount. I think it's 10x more difficult to raise as an investor. It's just normal because when someone sees you as an investor, there's a certain level of there's a certain level of competence and ability that they attribute to
Yeah.
you, right? And that in itself is a problem because the bar gets so much higher, right? In regular entrepreneurship, which is founder side, it's okay to say, I don't know these things, and we'll figure it out, right?
But not as a fund manager.
As a fund manager, you have to come with a complete plan, right? And there's no question. You can't answer, I don't know, right? But as a founder, it's okay to say you don't know because it's an iterative process, right? And it's okay to say, hey, we failed, we'll go again, right? Arbitrage is never coming back, right? But as a founder, you can pop up and raise another 350 million.
Yeah.
After doing an average kind of performance, right? And so it's very different, and I think it puts weight. And this is the reason why the average age of an investor is so much higher than the average age of a founder. Right? Because it's expected that you've gathered all this experience and basically you're this crystal ball that knows it all. Right? And that's why it's so much more difficult, because when I come to you as an investor, what I'm convincing you to do is to say, I'm a better investor than you, give me your money. Right? Basically. But as a founder, it says, I've discovered something and I want to pursue this opportunity. Right? Let's see how it goes. Right? And the kind of providers of the capital also for VC funds are less, they're more risk averse. And so the kind of questions you get from a risk averse institution or person, they're very different. The bar is so much higher. And again, funds being 10-year vehicles and being basically in continuum, infinity, because a fund manager usually raises another fund and another fund.
Oh yeah, you have to always
it takes out the FOMO element, right? It takes out the FOMO element. So the investors who waited 3-4 years to see what we do with our first fund, right? And then they can say, hey, we want to invest in your second fund. As a founder, they know when an entrepreneur comes to you, if you're 4 years late, you're late.
Yeah.
It's gone, right? And so this FOMO drives the ability for investors to open their wallets early.
Yep.
Right? And so it's very different. So it's built for you to overlook flaws in a founder, because even a founder with many flaws can build an Uber. And the question is, do you want to be the guy who passed on Uber because he didn't respond to your email in 3 days? or you want to be the guy who said, I don't care, here's the wire, right?
Yeah.
And we know how you feel as an investor if you did. And so it's so much more difficult. But I think it's great because the tenacity it builds for you as an investor helps you to be able to help your portfolio founders to raise
That's
money,
true.
right? It's always, I feel like it's always so much easier when I get on the road to help a founder raise money. Sometimes I just coach them. I say, see this, and this, and we've fallen over each other to put money in your fund,
Yeah.
to put in your company.
In
There's no fund manager whose first fund people are falling over each other to put money, right? It's like, yeah, you might oversubscribe, but it's not the same thing. And so yeah, I think the right amount, I can't remember who said this. I think it was Lolita Hub. It's 10x.
10x.
Exactly 10x more difficult to raise money as an investor.
That's great. And I agree with you. It's managing money is not an easy business. So managing startup is one thing, but managing somebody's money is not easy business, and getting return out of it. Like if you can't even manage your own money, how can you manage somebody else's money? A lot of people ask like, oh, give me $10 million and I'll do wonder. And like, what will you do with that? And they have no answer. Now, I love your point. Like, as an investor, you need to have a plan, and you need to have all the answer. You cannot say that I'll figure out with your money. You have
Correct.
to, know. Now, important thing, what you're doing with your fund is you're investing in this pre-seed and seed stage startup. So I assume most of the startup you're investing is either they're pre-revenue or without too much of traction or very little traction. So important question is, how do you make your investment decision? Because at this stage, you don't know how that company will grow and what will happen. And what are the key things you look in these startup, especially in Africa?
I'm not going to bore you with the old conversation of team, market, traction.
That's everybody says that.
Every VC analyst who gets out of business school knows those things, but they can still make horrible investment decisions, right? Yeah. So I'll say at We Capital, what differentiates us is two things. To be able to pick great companies, you need the art and science of it. And when I say the art, is basically having a structured approach.
Yeah.
Approaching your investment decisions. Basically, you have to have most of the data that you need to make an empirical decision, right? Which is actually the easy part. The other part is that you need to staff your team with people who have what I call investor IQ, right? It's that thing in your gut, right? It's that entrepreneurial feeling that can tell, right, or can guess less and be wrong less of the times than other people about the direction the market is going, right? Or what a company's influence in a changing market is going to be. No one can teach you this. You can improve it by having more information at your disposal, but no one can teach you this. And this is why we don't hire from traditional venture backgrounds at We Capital. We hire people who we think have investor IQ, but who are willing to really learn quickly, right? And this, I think, is especially investing at such an early stage.
Yeah.
A lot of times you have to make that decision. Where is this market going? Remember?
Yeah.
Is this the right person? And somewhere in between that are all the things that you cannot explain, right? The moment you can logically explain an investment decision at seed or pre-seed, and you can logically explain it completely, it's probably not going to be a world-changing investment, right? It will be hard to convince anyone that, I'm going to build this app and I'm going to take pictures of people's empty rooms and couches, and then a stranger, given all the serial killer documentaries, a stranger is going to come into my home and is going to crash on my couch and is going to give me $30, and out of that $30, I'm going to take $3, and then we're going to build this company that's going to be worth 10, 15, $40 billion. I'm like, get out of my office.
Yeah.
Right? But so it takes someone who would say, what's the housing shortage?
Mm,
How many people are sleeping in trailer parks? Right? What's the demographic of these people?
mm,
Right? Um, how much are they spending?
mm.
What's their ability to pay? What's their willingness to pay? How much is an average hotel room? Right? That still doesn't tell you Airbnb is going to be successful, but it's some information that you can work with,
Yeah.
that you can pair with your investor IQ, right? And say, you know what? This might be the future.
Mm.
And this is how you win investing early. If you're investing in Airbnb Series A or Series B, it's a different ball game.
Oh, yeah.
You try it and test it. Now the question is, what are hotel prices saying? How are hotels going to respond? How's regulatory authorities going to respond?
Yeah.
The real estate market going to say, right? Our policy is going to kick against it. These are things that are now more of science,
Mm.
that you cannot pick and say, okay, we're going to make a decision to invest in your Series B. But pre-seed, seed, you need people who think like entrepreneurs,
Yeah.
who put themselves in the shoes of an investor or of an entrepreneur and say, I believe you can kill this.
Mm.
Because also all the empirical data, which is not complete, but I can extrapolate, I can complete the puzzle, and I'm going to back you.
Yeah.
And early stage investors are, I think, a rare breed. It's the ones who are doing it right. It's that hybrid between being an entrepreneur and being a provider of capital, and also being able to balance your risk on the portfolio side, which is your job as a money manager. And so all these other things come together to really tell you what companies should we be backing.
Yeah.
But as I said, the two major things that we're looking at is this market big enough? Is the opportunity big enough? And is
And
this
there's a
person, is he the right person, or are they the right person to make this opportunity click?
Yeah.
And so this is what we usually look at. And I think the secret to that is picking people who think like that.
Yeah. No, I love your this analogy of art and science of investment, and it's very important. Some investor told me that they also asked themselves that would you like to work in that company, because are you really excited about that particular market or not, or is the problem you want to solve or not? Like Airbnb is a classic example. A lot of investors turn them away or throw them
Rightly
out of
so.
their
Rightly
it's like
so.
I'll rent your room in the house and stranger will come and stay, and they're like, okay, you kick out, and but it's a big company, and like you said, if you have external validation point, what is the hotel price, why people will do, what is the demographic. In fact, I didn't mention, so my first company was Airbnb for India. I launched in 2011, and we were ahead of market because a lot of our guests used to go to these houses, and 4 o'clock they used to wake up the owner and say, I need a milk, or I need a glass of water, or I need tea, and the host said, man, you're not in a hotel, it's my house and I'm sleeping, and so both were unhappy. So we were ahead of time, and like you mentioned, sometimes your idea is good, but you are probably right person to do it, but the market opportunity is not existing, or probably it's coming
Correct.
later.
Correct.
So thanks for sharing that. Now, one of the key thing what we are seeing in the market is there is a lot of capital, and people have money available, but one thing which differentiate one investor over it is a value add, and value add in term of a knowledge, experience, connections.
Mhm.
Just want to understand what is your value add and how you help the founders. And I also saw like you have such an impressive list of LPs. Do you also bring them on board to help your portfolio companies?
Short answer is yes. And so if you probably seen any of our press, you realize that our funds are called the Mentors Fund 1, Mentors Fund 2.
Okay.
This is a very central piece of how we approached the Africa opportunity, right? At a time where resources were scarce. And when I say resources, I just don't mean money. I mean talents to build these companies, right? And a lot of just technical expertise. And so what we did is, along with each of our funds, we have something we call a mentors pool, right? Which is a combination of people who are highly skilled in different verticals or
Yeah.
expertise in different areas, who mostly are investors in the fund, and some who are not, who dedicate some of their time monthly to help portfolio companies as the need arises. I think I have great experience, right, across different things, as well as entrepreneurship. Francesco, Peter, the rest of our team, really amazing team, but we can't cover all the things a founder might
Yeah.
need, right? And so we have brought in people who are now just as investors in the success of the founders as us, right? To say, hey, I'm here if you need me. If you want to talk about how to, for example, structure to minimize your tax liabilities, I'm here to talk. I'm a
Mm.
partner at a tax firm, for example, who's an LP in our fund, right? Or how to build on your free AWS credits so that you're not stuck in 2 years when you want to move to IBM cloud, right? Things just as simple as that. And so I think that's our number one value add. The second thing, as you know, is that our team, we spend a lot of time on the road cultivating relationships,
Okay.
both in corporate and in venture. These usually help our companies not to run out of money,
Hmm.
right? Really
Which is
open up our
important.
network, both for distribution and being able to raise follow-on funding, both from people who are like our LPs or investors that just are in our network around the world, to be able to add value to that and possibly create exit opportunities, right? Like an exit opportunity that we recently negotiated in our portfolio. I was the one who actually made the introduction, right? A much bigger company that we didn't invest in, and a much smaller company that we invested in. And we said, I think there's synergy here. You
Yeah.
guys should talk. They came out of that conversation with a term sheet to get
Oh,
acquired, right? And so those are the kind of value that you probably want to add as a VC, but eventually you have to realize you're not the founder.
yeah.
So a lot of times you need to be available, but not in the founder's face. If you wanted to build that company so bad, go become a founder, right? And so you have to stay out of their way to actually do their work.
Hmm.
But you also have to support when they need it and be available, be eager, so that they see you as a first option.
Amazing. No, I agree with your point about that investor is not a founder. So don't try to get into the shoe of the founder, because then and we see a lot of cases where it happened when investor tried to drive the company
Mhm.
and everything collapsed. So having
Correct.
that clear line is always good. Great, thank you so much, Olu. And this is kind of my last question, and it's basically, why do you think more venture funds should invest in the Africa region? And what is your future vision? You already mentioned about the return side, but I mean, not on the return side, but actually, what is your future vision? How this tech ecosystem will help to grow Africa?
Um, from an investment standpoint, I think there are two reasons, right? There is the reason to hedge,
Yeah.
which is basically created by FOMO, which is right FOMO, and there's also the reason for now.
Hmm.
And I'll start with the hedging. If a region of the world is going to house about 20% of the world population in our lifetimes,
Yeah.
um, as a global investor who is serious about forecasting and succession and the future of their firm, I think it's a no-brainer to create footprint
Yeah.
where the future is going to be. And again, Africa has developed slowly behind a lot of the world, but the way there's a globalization that is being caused by freedom of movement and tech, where um, if not for anything,
Mm.
right? Africa being a significant part of the world is going to experience that ripple effect. Let's even say they get nothing right. They're going to enjoy the ripple effect of being in the world.
Yeah.
And you want to miss them from that. So to have a good hedging strategy, you need to be in Africa, right? And as you know, it's getting more and more expensive,
Oh yeah.
right? The second thing is there is a great opportunity for now, and it's growing, right? Mobile smartphone and mobile phone penetration is growing.
Yeah.
The demographic are people who are going to be working for the next 30, 40, 50 years, right? Extremely young group of people, population growth,
Yeah.
and access to the internet and cost of data is favorable, right? Access to the
Oh yeah.
internet, growing cost of data is dropping. It just makes a lot of sense why we're seeing successful tech companies in Africa more often than we saw them 15 years ago,
Oh yeah.
right? And so when you see those kind of things, for an investor who has a global perspective and a global mandate, it just makes sense.
Mm.
The opportunity is here and it's now. And clearly, global investors have heard that.
Mm.
And that's why you see the total investment in tech and tech-enabled businesses in Africa. When I moved back home in 2017, it was like 400 million.
Mm.
No, it was 151 million.
151. Okay.
Yeah, it's going to be about 5 billion this year, minimum. So
Gotcha.
clearly, people are taking note. And also, what we've seen is even the African investors are beginning to, they've joined the party.
Mm.
And this really helps. In our fund today, I think about 40% of the committed capital is homegrown.
Ah, interesting.
Yeah. And so this is where you need to start building wealth. And who knows, soon you'll see more funds like NASPARs who
Mm.
are investing in Africa funds and investing globally too, because there's wealth being created everywhere in the world. It's just that the rest of the world takes some of the wealth created in Africa because they invest in Africa. Africa isn't investing outside.
Yeah.
And so they don't partake in the growth that comes from outside. And that's why I said about being being a global player. And so I think Africa has come of age, which is it's plain to see, it's clear,
Yeah.
right? About 50% of all the top tier funds in the world are now investing in Africa,
No,
have at
no.
least invested in Africa. It was not the same thing 10 years ago.
Oh yeah.
So,
I would say even 5 years ago.
exactly.
In 5 years, things have changed
Yeah.
dramatically.
So I think it's clear to see what direction we're moving in. And as I said again, how this is going to continue depends on us.
To get the return,
Correct.
to get financial return, and I think what you said, that's very important for any ecosystem, and that's what I saw in India too. uh, when you have successful founder, they
Mhm.
become investor, and then it's become like a vicious cycle,
Correct.
virtuous cycle, sorry. So it's become like a virtuous cycle because you have more money, you invest, and then more founder emerge, and they make more investment, and that's what happened to build a local ecosystem. Now
Correct.
thanks for sharing that, and sharing for your insight and knowledge and all. Generally we end our podcast with a small rapid fire round. An
Mhm.
idea for that rapid fire is to know a little bit more about you as a person and what you think on a personal side. I mean, you already answered a couple of them, but I would still love to ask and modify a little bit for you.
Mhm.
So whenever you're ready, I'll start with my rapid fire question.
Absolutely. Go for it.
Okay, so you mentioned that you don't want to be in a banking and VC space. You want to become a footballer. But let's say if you were not in banking, VC, or professional footballer, what other profession you would have selected?
Um, I'll probably, so background is I feel like I'm both right and left brained. My mother is totally artistic. My dad
Ah.
is veterinary surgeon, right? And so I think I could have either become a lawyer
Hmm.
or a musician. I play two instruments myself.
Ah.
right? And so, yeah, very different things. And I feel venture actually was the only career I could probably be doing. I think it brought me peace.
Mm.
Everything else I did, I felt like I was leaving a big, huge part of myself out. Venture actually brings me peace. It brings me home. It allows me to express a lot of the things that are in there, right? And but if I wasn't in venture, I'd probably I'd probably be a
Yeah,
musician or a lawyer.
musician. We'll love to see that side of you as well. Playing.
I think it's late.
It's late, but you never know. It's never late in the party. You never know once you are successful, and then you say, okay, now enough with venture, and I want to go into the music industry.
Well, who knows? But
Who knows?
I'm enjoying venture a lot for now. So
For now, it's good. You're helping the society, so I don't want you to leave that. Continue. Now, the second question is, what is the best advice you ever got? Any personal or professional advice you ever got in your career or in your life?
Hmm, I feel like um, I've gotten a lot of great advice. Um, I'm not sure I can remember at this point what the best advice I've ever gotten is. Yeah, I'm not sure I can remember. Give me the
Or
next.
any advice you want to share with people?
I think for that, I probably learned a lot. Is that when you decide to do something that you think is possible for you, you have the ability, approach it like you have no choice,
Hmm.
right? Approach it like you have no choice,
Hmm.
like you have no plan B. If you fail at it, then you have a plan B. But not having a plan B really increases your chances of success.
So basically, walking on a rope without a safety net. I mean, even if the safety net is there, do assume there is no safety net. So
Correct. It improves your chances of actually walking on that rope.
survival, huh? I love it. I love it. No, that's a good advice. The plan Bs are good, but you should never have them till
Yeah,
you
it
don't
should be
need
an
it.
afterthought.
It
Afterthought
should be.
of failure.
I agree with you. I agree with you. Now, my next question is: any favorite startup which you wanted to invest and you couldn't invest?
None yet.
None yet. Like,
I did have one. I can't mention it clearly, but I did have one actually in the mobility space,
hmm,
right? But that was the one regret I thought I was gonna have. But I feel like maybe 8 months after we passed, some government policy changed against the
okay.
company, and so it never became one of my big regrets anymore, right?
So,
Um, but yeah, not yet. I feel like I've probably invested in the companies I had the opportunity to invest in. Um, for example, a company like Flutterwave, I would have loved to invest in that company, but I was at Silicon Valley Bank when they were raising.
hmm,
So I didn't really miss an opportunity. I knew they were a great company, but I wasn't in a position to pass on them.
yeah.
I
Yeah.
think every other company that I would have really loved to invest in, I think I was able to. And I guess the jury's still out, right? Maybe I'll have a regret this time next year.
No, I wish like you get a success whichever company you want to invest, but you always have some company, you always regret to
Correct.
missing out.
So I don't know the one that got away yet. Maybe because they're not as hugely successful as I bet against.
But probably in future.
Yeah, so we'll see.
A lot of people missed out. I know, guys who missed out opportunity to invest in Uber in their seed round.
Mhm.
And out of five, three angel investors did not invest it, two invested. And
And their lives is like night and day.
it's
Actually, I
like,
do know an investor in our investor group who got his money wired back from Uber. Yes.
man,
When he
that's
realized
even
that
worse.
Travis wasn't going to run the company, which was the initial plan, right? He said he wasn't going to be CEO, and the investor was like, I
No,
put this
I'm not
money into
finished.
shares. I thought you were going to leave this company. So can you wire me my 50K back? And he got his wire back. So I guess that's what regrets sounds like.
That's a biggest secret. Now you're spending time between US and Africa, but I'm pretty sure you must be traveling different other countries as well. Which
Yeah.
is
I'm
your
exhausted.
favorite city in the world?
Amsterdam.
Amsterdam.
Yes.
Any particular reason
By
or?
far. I just love the energy. It's a very happy vibe.
Hmm.
They have a mix of everything. And it's in European terms, it's a melting pot. Um, and yeah, I really like the city.
Yeah, and I don't know if you know that it's also the cycling capital of the world. So there are more number of cycles than the people in that city. So
I didn't know that. Maybe it's one of the reasons. It's my mobility
it's a
thing.
crazy city, where people love their bicycle and they have 2 or 3 bicycle in the house, like an
Right.
American, who have 2 or 3 cars. So they have 2 or 3 bicycle in their house. Now, this is my last question. If you can change one thing in life, what would it be?
Mm. Oh, that's tough. Do you mean a decision I made or something that was
Anything
just
you want to
born?
change in your life, like if you get a chance and say, Olu, you can change one thing in life, what would you pick? Personal, professional, societal?
Yeah, I would probably have moved. I would probably have loved to go to an Ivy League college, first degree, and move to the US much earlier.
Hmm.
Right. Just for the amount of exposure I could have gotten earlier in my career.
Yeah.
Right. But again, there are people who had those opportunities and are not necessarily, it's not a straight line, right?
Oh, yeah.
So I'm very grateful for how everything has turned out. Who knows? They say good times create weak men. Who knows if I had had a better time? But I think it's one of those things, and that's why I try to, when analysts come through the fund, I try to, push them to a highly graded college MBA program because I feel like those were some of the opportunities that my background didn't afford me.
Hmm.
But we move.
Yeah. So that's a good point. And sometimes you feel it would have been better, but you never know.
Correct.
Probably you would be working as a banker rather than working as a VC now. If you you moved early, you got promotions and you are settled in life and you say, okay, I'm done. So I'm enjoying my life. But sometimes it's there, like I like the 2 point you mentioned about the ripple effect. So it's like you never know what is creating what
Correct.
kind of a ripple effect. No, but thank you so much, Olu. I mean, I really enjoyed our conversation, and man, you got so much of knowledge and experience, and your answer and your open, candid discussion never follow a particular pattern or making anybody happy, but coming to the point and providing.
Should I be worried?
I shouldn't. I mean, I love that, and that's what the purpose is, to have this open conversation.
Yeah, don't send my LPs this.
No, we will not. We will just post it publicly. And but thank you so much. And to be honest, I wish you good luck in your journey. And I see your next one should be 10x bigger. Yeah, and we'll have probably a follow up conversation about your experience with Fund 3.
Absolutely. Yeah, really did enjoy this conversation, Jaspal. Great work you're doing. I wish you a lot of success too.
So thank you so much. Thank you for listening to this podcast. We'll be inviting some other inspiring guests in the coming week. You can subscribe to this podcast online to get the notification for the next episode. If you like this podcast, please don't forget to give us a 5-star rating, as it will help us to spread our message. If you have any feedback or suggestion for this podcast, please do write to us at info@mobility-innovators.com. I look forward to see you next time. Thank you.